If I had to start all over again at 18 years old, here are 5 investments that I would start right now. And you guys don't have to do all these, but even doing just one of these will set you up for success in the future. So the first thing I would do at 18 would be think about retirement, and that would be to start a traditional or a Roth IRA, and I will explain both of these. So for those of you that don't know, IRAs are basically investment accounts for retirement that you put money into, you invest, it grows, and then you take it out when you're 60 years old when you retire. So the main difference is that a traditional Roth IRA, so this allows for pre-tax contributions. So that means basically when you get paid, before that money gets taxed by the government, you could put it into be invested. And then when you withdraw it, you get tax deductible withdrawals as well. So the difference between a traditional and a Roth IRA, well, a Roth IRA is that you are funding these accounts with after tax dollars. So when you have a job and you get taxed on your income, that money that you have is then money that you can then invest into your Roth IRA. However, the advantage of a Roth IRA is that when you withdraw them, they are totally tax-free. As long as you withdraw them after retirement or whatever the age is, I believe right now it's 59 and a half. So when you're 60 years old, you can withdraw it and actually pay no taxes. This is usually something that's better for people that know that when they retire, they'll be in a higher tax bracket by the time they retire. So putting money in now is an advantage, because if you know you're going to make a higher salary, you'll be in a higher tax bracket in, 30, 40 years when you retire. This is going to be a better benefit. But honestly, having a traditional IRA or Roth IRA doesn't matter too much. The point is that you are just starting to invest. And you don't have to put a lot into this, guys. I'm talking like $25 a month at 18. Like, that's better than nothing. It will add up long term when you're doing it for 20, 30, 40 years. Then you get a better job when you get older, and you can start putting, let's say, $250 a month, or maybe $300, $400 a month. Now, they do get maxed out. Like a Roth IRA gets maxed out about $6,500 per year. So you don't always have to max them out, but just putting something in when you're young is very beneficial. Now, the next thing I would start doing is to start DCAing ETFs. So DCAing stands for dollar cost average, and ETFs are exchange traded funds. So let's talk about some of these. Now, ETFs are great because the main ones really just track the S&P 500 or the NASDAQ 100. So basically, you are looking at some great returns because the S&P 500 grows at about 8% per year annually. So long term, when you get 8% per year for 20, 30, 40 years, that really adds up quickly. So just some ETFs I wanted to show you guys here would be VTI. That's a total market ETF. Then you have SPY and VOO. Those are S&P 500 ETFs that track the S&P 500. And if you wanted to go something that's more the NASDAQ route with a lot of the new technologies and new companies with tech and AI, you're looking at QQQ, or TQQQ is triple leverage QQQ. So that is just a slightly more volatile ETF that you could get into. Now, I talk about these more in my free Modern Portfolio Beginner Guide. So by the way, that you can guys go download in the description in this video. It'll go to my beacons, and you guys can get that absolutely free. So make sure you guys check that out as well. Now, the third thing I would start investing in is obviously Bitcoin and certain types of crypto. Obviously, you guys know that this is my specialty on this channel, and if you don't know, this is your first time watching my channel, I mostly talk about crypto alongside other investing ideas as well. So yes, I would start DCAing Bitcoin at 18 years old. If I actually did that at 18, I would be very happy right now, but I didn't. But however, long term, I really think, guys, that you're going to look back at this, and Bitcoin's trading around $90,000 right now. It's going to be at $1 million one day. So start right now. If you are 18, or even if you're 19, 20, 21, just start DCAing. So first thing with crypto, Bitcoin. If you don't know what you're doing, just get Bitcoin. Same thing with ETFs or an IRA. Just do like $25 to $100 a month. And as you get older, get a better job, you can start DCAing a little bit more money. Now, if you don't want to buy crypto directly, but you want to get some exposure to Bitcoin, I highly recommend just getting a Bitcoin ETF. You could get FBTC or IBIT. These are 2 Bitcoin ETFs that you guys can get through your brokerage or through your IRA, whatever you guys do it through, whether it's like Vanguard, Charles Schwab, or even if you're doing it on Robinhood. So that is the best way to get some exposure to Bitcoin without actually getting a centralized or decentralized wallet or ledger and actually purchasing Bitcoin. I do recommend at least looking at these 2 ETFs. Now, if you want to go deeper in the crypto rabbit hole and see some potential larger games but more volatile coins, obviously Ethereum, Solana, XRP, these are some other altcoins. below Bitcoin that are also really large market cap wise. So I'm not going to go too deep into altcoins in this specific videos, but for those of you that watch me already, you know that you can go back on my channel and watch a whole bunch of other videos. I mean, I have a whole video talking about Solana and why I think that you should DC up into 100 Solana and just all other type of altcoins as well. However, like I said, if you are new to this channel and you're just trying to keep it very simple and not go too risky, just get $25 of Bitcoin a month and call it a day. Set those auto payments up, and trust me, in 5-10 years, it's not going to take 30-40 years as some of these other ETFs like VO or SPY that you might have to wait for. Honestly, like 5 to 10, 15 years with Bitcoin, you will see some great returns, because as of right now, Bitcoin's only 15 years old. So yeah, like I said, if you want more information on this, go watch some of my other videos. Now, the fourth thing I would do if I was 18. Now, I don't really consider this an investment because technically you're probably still lose out into inflation. However, if you do guys have some money in a savings account at your bank, now I know you probably just have a checking and a savings account, but just go get a high yield savings account. And it doesn't matter which bank you have, whether it's Chase, Amex, Bank of America, or even just a local bank. Just go to them, see if they have a high yield savings account. It could be like 3 to 4%, because right now that's just better than getting pennies to the dollar for whatever type of bank account that you have right now. So just go get a high yield saving account, throw money in there, get 3 to 4%. Now, inflation for the dollar is still about like 6 to 8%. So technically you could be losing it on most years. However, this is just better than nothing, or something that's just like 0.02%. And the fifth and last investment I would do at 18 years old would be buy long-term stocks and just hold them. So now, what are these? Honestly, just some of the major stocks that you probably already know of, like Amazon, Apple, Tesla, even Nvidia now. So there's a whole bunch of stocks. Short term, yeah, they could be a little bit volatile. Like Tesla last year, it went down like 50%, but I'm talking, you're holding these for like 5, 10, 15 plus years. In the long term, these are great companies that are, a lot of them involve tech in some way, shape, or form, or AI. So you know that they're going to do well. And I just think that doing this is almost similar to like buying Bitcoin, Ethereum, or some of the other crypto coins. Now, a quick story about this. One of my buddies about 10 years ago put $500 in Apple. Now, this was when we were like in high school and obviously didn't know too much about it. And today that $500 is worth over $10,000. So especially if you are young, even like I said, even if you're in your early 20s, guys, putting money into some of these well-known and proven stocks for 5, 10, 15 plus years will do very well. Like I said, those $500 he could have kept in a bank account, in a checking or savings account, and it would have just sat there and lost out to inflation. Instead, he made over $10,000, and I'm sure that if he holds Apple for another 5, 10, 15 plus years, or until he wants to make a big purchase or actually withdraw that, he can make another $5,000, $10,000 very easily. So I would definitely take some time to research some good, strong stocks that look promising for the next 5, 10, 15 plus years. I mean, even in Tesla, I knew a couple buddies of mine that back in high school were buying Tesla when it was like under $20. Tesla nowadays ranges from like $200 to $400 in the past like year or so. So just find some good stocks. Now, the lower ones right now could be more volatile, but going forward, if it's going to be a good stock, you know that you're going to win out. There might be some years where it's down a little bit, but long term, you know that you're going to be positive and have a good ROI on whatever you are investing. So to finish this off, guys, yes, this is how I would start investing at 18 if I were to start all over again. I hope you guys enjoyed the video. And like I said, it doesn't matter. You don't have to be just 18, even if you're like 19, 20, early 20s, or even in your mid to late 20s, just start one of these, because long term it will definitely pay off. Guys, please subscribe to the channel if you haven't already. Like the video, leave a comment, like I said, and go download for free my Modern Portfolio Blueprint. I go into way more depth about a lot of these topics that I discussed in this video. Thank you guys for watching, and as always, I will see you in the next one.